Volume check. Do you have the stream up? There we go. Yes. All right. How does it look? Good. Cool. 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 All right. Well, here we go. All right. It popped up above that level and took out this little 5 minute zone and stayed above really the open at 2803.50. Cleared this. Now we're into that middle candle that we were talking about earlier. Looks like it wants to head up toward the high side. The high side would be close to the overnight high is kind of what we're looking at for this next setup. Let me see. Let's change the time frame a little bit. See if it looks a little more better. Yeah, it's that middle candle that we're in right now. So we're going to wait and see if we can get up a little bit higher. Little bit higher. But you see that these pullbacks that we've been having, especially overnight, this one last night, nice strong move down, but it's right into this area that prices really took off from that we saw the other day from this 90 area. And so it's kind of market has attempted to push lower multiple times. It can't. Um, it broke some areas of selling, some supply areas, and so held the demand, taking out supply. So now we kind of have almost a different market environment until we revert back down lower, until we clear or get below yesterday's low. If we stay above it, we may move up a little bit higher into yesterday's highs and this overnight high, but we may just stay range bound. It is Friday. There is no economic news, so you know it could potentially just be a slow day. We're up what, half a point on the ES right now, so um, may turn into not a ton of catalysts. Yeah, not a ton of volume either. Let's see, where's the volume today? It's at 427,000. It's not bad for 7 o'clock, but it's nothing like too crazy. Okay, so now we see that we took out this little rally and then consolidation and drop that pushed it down to new lows overnight. And then we came into this much bigger level um, with this big strong move down, and it came in up at 2806.50 and hit that. That is a 4 point zone, so it's 200 points worth of risk per contract. For this particular type of entry, we could wait a little bit. 200 bucks. It's not 200. No, 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 no. It's 4 points. From 2806.50 to 2810.50 is 4 points, which is 200 bucks per contract worth of risk. Um, yeah. No, you're good, man. I may have said it wrong. Yeah, it's okay. Just take this trade. It's only 200 points worth of risk. Not a big deal. It's 10 grand, per contract. Not a big deal. That's okay. That's it. No, no problem. The other thing that we're noticing here is, we had a couple squeezes, and the last time we had a squeeze this past week, after coming out of a period of trading like this where we're trending down, we're chopping up a little bit, and then it finally starts to squeeze and comes into a demand zone, a real nice area of buying opportunity, and then takes off. Where is that buying opportunity again that may be coming up here if this is going to continue to squeeze right here? Are we going to get a further push down before another move up based on this, or are we going to start squeezing downward? But as you can see, if we go from right or left to right and we have that almost, sloping up with the squeeze, that's the opportunity we're looking for. The sloping up with the squeeze, of course, with a great opportunity to buy in terms of, you know, uh, price location and formation of the pattern. But if you can get something like this and we potentially start squeezing, the problem with this is at the moment we're not really coming down into an area of real solid demand. It kind of already came close to that down here. We're kind of just in the middle of nowhere unless we're just purely taking this off at this level right here, just this pure supply and demand level. Um, it shows that it's buffering. Is it? Is there having? Is there like a connection issue? It just shows it's buffering on YouTube. I don't know. Okay. There's no. As long as there's no like issue. Cool. I think we had that area towards the top, didn't we? Yeah. Top of the zone up here. Came right into that middle candle and reversed. Temporarily. I mean, we're just literally right back to where we were within a point of the open. Yeah, it's a little after 7 o'clock right now. Let's see if the market's going to pick a direction, and then come 7:30, if we can get a reversal from that direction, if that can line up for us, or we're waiting for a little higher. Yeah. Get down to this 1 minute. Yeah, this is just a lot of chop. Lots of choppies. Most likely, if we get a move down back towards these overnight lows, we're going to see some sort of bounce, at least initially, potentially off of this level in here. There's 27.93 up to about 27.95. Potentially there may be a bounce in there. Looking on this 1 minute, yeah, I think we'll be in a decent place with that short up here. Kind of made some highs up here, and then it started to fall off, started to base, consolidate, and then really dropped off. Up in here is not a bad area. Not a study. What are you doing? Oops. Take that away. Okay. We have that up there. And this again, this is a 1 minute, so it's really short term. Let's pull back a little bit and take a look. Again, yeah, down here at this 27.94, we may see a bounce if we can get a further pullback. This should be able to clear this out, no problem, if we get a nice move down. This isn't really solid demand in here, not great buying opportunities, but down below, it's going to probably test this overnight before breaking through, if that's what's going to happen. If we can't get below this 28.03, we're probably going to head towards that overnight high, which is up here that we have marked off, at least initially. And then from there, it depends on, uh, you know, kind of where the rest of the markets are at, time of day, and really how much momentum is behind this thing. Right now, what? We're basically flat on the day. Yesterday was real choppy. Kind of expect that choppy day yesterday, you know, choppy day overnight or choppy trading overnight, and so far it's kind of par for the course, doing the same thing almost. So we're just kind of waiting and seeing. It is. It's not doing a whole lot. Normally on Fridays you have economic data coming out and like reports and stuff like that. But this is this is summer trading. A lot of the time you're gonna see um, tight ranges, not a whole lot of volatility, um, not a lot of follow through, and that's part of the problem that you can run into. And so that's kind of why we go down to smaller time frames. Normally being on the an hour chart is fine, and we're able to grab enough opportunities and see opportunities off of that. But um, see, it looks a little different on Thinkorswim than it does on TradeStation. On Thinkorswim, the level is actually right there, and it came into it overnight. You take this base candle with this almost buy hammer candle, and that creates the zone in here, right in here, because that's where it broke up from. You could see it came in there initially overnight and then rallied out. And then it retested, took out the low, but stayed within that zone. And this was a good time of day. As you can see in this dark area, this is regular trading hours, and this is overnight in the shaded area. And so this was a good time of day that this formed, and this candle was created. Lots of buying pressure coming in and took the market up after a nice squeeze. And so the level was really right in here. And you can see that it did come down in here on that second test and grabbed it, and that's what put in that overnight low at 27.93. But unless you had the order in overnight, you're not going to grab that, or you're up, or you're in Europe or somewhere around the world that you're trading the U.S. markets. You're not going to be able to grab that unless it's an order that you already have in place, kind of like a set and forget. And so, but yeah, it came in there. It looks like it on Thinkorswim. Let me see on TradeStation. No, it did it too. It came in there. Sometimes the candles are a little different on TradeStation versus Thinkorswim for whatever reason. How the opens and the closes um, get printed on the candle. Sometimes you've seen it. You've seen the differences sometimes that I notate and talk about. It doesn't really make that big of a difference, but sometimes it's the difference between missing a level or getting into a level or into a trade because you have the level marked off a tick or two higher or lower, and then you don't get filled, and then you look at the other platform and you're like, oh well, darn, because it did come in there, and it's like, how come it didn't look like that on the other platform? So um, if you use multiple platforms, you want to check both. I always revert to TradeStation. I'm just more comfortable with TradeStation, and their candles and charting has really never let me down. So I'm kind of sticking with them. So, but yeah, let's remove that. So yeah, we came up into this. So this was the trading yesterday. Real range bound and bleh. Overnight we put in lows, and then pre-market before the market opened, or as the market opened, it put in a low and then rallied up and then kind of just chopped sideways, and then finally aftermarket is when it pulled back last night in the Globex session. Pulled back a couple times, tested the lows, came into this nice zone. You see this area that came out? This is what we look for and what we like. This is where we find the best opportunities is if they, if we're in front of the computer or if, they're hitting during the day session, not when we're sleeping. It doesn't do us any good overnight unless we have the order in, which we didn't. So But when we're looking for a level, we want to find something like this. The origin of this move is the zone or the level or the price at which you want to be looking to buy. Now, most people, when they see big red candles, they start to sell. And that's actually how a lot of algorithmic trading, a lot of computer-based trading is set up, where when there's selling pressure and they start breaking levels and demands and moving averages, whatever system that these algos use, but they're programmed to sell more. But what they don't take into account is what they're selling into. And what they're selling into in this case was an area where prices exploded up higher for about 20 points. And so if prices are going to come back into that area, the probability that you'll at least get some type of movement out of there is much higher. And that's all we need, is just putting the probabilities in our favor. If it works a higher percentage of the time than it doesn't, and you're able to have a good risk to reward ratio and manage your profits, use a stop loss, you know, it's simply you just treat it as the casino. You're the casino. You know what I mean? You're going to have an edge in your favor. Somebody's walking up to your table, and then you start playing the game, and this is how you play the game. And so, finding an opportunity like this, identifying how much risk you're willing to take to see if this will work, and then identifying a profit target allows you to, come to the decision if you're going to put on the trade or not. And so, all that said, great that this level is here. It bounced a couple times. It held. Not great as it happened overnight. Dang it. I knew I should have stayed up all night last night. I'm just kidding. um, I mean, what can you do? There's not much to do about it unless you have, like I said, orders already in place that you just leave in the markets. And sometimes you do that. Sometimes I don't like to do that. Um, it just depends. But yeah, now we're coming up into this area. Yesterday came up into this 2806.50, 2810.50, and slightly pulling back from that. Now there's probably going to be a point in this area where if prices come back, we'll get a bounce out of here. We're almost staying in this overall big channel that you can see, this upward sloping channel that we've kind of been in. Unless we break that to the downside, then we may see a move back, at least down here, 2760, you're going to see a pause. This was an area where prices had come up, pushed up, and then retraced. And you see this wick with this hammer candle, this buy candle, barely came into this area of congestion and took off and hasn't looked back since. And so we can expect, with reasonable probability, reasonable expectations, that if the market is able to get back down here and take these lows out, it'll come right into this area, this 2760, at least for a bounce. And we're not shooting for, home runs here. We have our profit targets, 3, 5, 8 to 10 points. Those are our targets, 3 points, 5 points, and then after that, it really depends on the level, the time frame, and how many contracts you have left. But just looking at this chart, you can really see two areas on the chart in this time frame, the 60-minute, where prices really took off from. And we already highlighted that first one. And then here's the second one. Why are these areas important? Well, the move away from the level is what we're looking for. The move away is such that it's a strong rally in this case, because we're looking for longs and we're in an uptrend in this market. So we want to buy pullbacks. And where do we buy pullbacks? Well, we look for areas where prices either consolidated previously and then took off from, And if we're doing that, we need to find areas where uh, the market actually left prices and there created a big gap between where the move started and where the next level is. And so you can see at these two particular spots, the market came down, hit a zone, and then rallied up really hard. Market came up, paused, pulled back into this area, and then rallied up. So, since this is one of the criteria that we look for, having a nice strong move away in either direction. This is a nice strong move away from this zone for a short. The problem is we have a lot of chop around it and a lot of chop behind it. We want to find areas where there's not a lot of chop behind it. In this particular zone, there is some trading, but it's very little trading. Whereas this, you have all of this trading in here, and then the level is right next to it. This, you have some trading behind it, but not really. It comes down and touches into an area that had not been touched since it left this zone. The same could be said for down here. Prices came back, pulled back into this 2730 area, and then took off, and they haven't been back since, have they? They have not came back to this area since price was here originally. And so you have a strong move away. Price hasn't been back to this area, and we're much lower than current price. Those are three things that add to our decision making, add to the validity of this trade. Now, waiting for it to get down here is another story. We may not get down here for a while, or we can get down here real quickly. If you're looking at the market action up here, and this is turning into more of a lesson than trading, but you can see we put in a high up here right around 28.18. And the market didn't hit this area in reverse for no reason. If you go to a bigger time frame, specifically the daily, you're looking at this monster of a move down. This is a daily chart, and this is back in February when the markets, dropped about 10% in 2 days. And so this was the origin of that move in here, somewhere in between 28.20 to up to 28.40. We don't know exactly where. There's some wicks in here, wicks to the upside, but as you can see, and typically what happens on bigger time frame levels like a daily or a 240 or a 480, if the zone is really good, it'll barely touch it and then fall away. And it barely touched it at 28.18 and dropped to 27.90. So it's about a 30-point move, which isn't bad. That's $600 a contract. If you can take some of that out, you're doing all right. And going back to a couple of our daily videos recaps, we talked about putting on some bearish positions in here when the market was up here, just initiating some, waiting for the market possibly to make another leg higher in here, another further push up before we see the real pullback. But we're seeing a couple weekdays in a row. We'll see how we trade today. If we can finish lower today, we may not get that opportunity just yet to get short again up here and kind of have to take on a little more risk to short down here after it has already turned. But the profit potential is really nice on a daily level, on a daily chart. 2740 is an area that we're looking at for a profit zone of a short up here, in the very least. Really, this 2760 is the ideal area for a profit target for this type of short. If the market can produce a move from here, clear this, we're definitely headed towards this 2660, 2670 area. The Dow had already come down and tested its lows down here and rallied up. The markets are all over the place. You have the NASDAQ and the Russell making new highs over the past couple of weeks. The S&P and the Dow have been stuck in this range since February, January. So the markets have been all over the place. It's been a tough environment. And so we're just trying to find low risk, high probability opportunities. And that's all we're trying to do. But getting back to that, we hit that higher time frame supply up at 28.18. You can see that here on the 180 minute, and we proceeded to fall. We've tried to rally up a couple times. Yesterday, couldn't do it. Trying to rally up again today, couldn't do it. And so we'll see if this weakness can continue. So this was about 27. Let's just call it 2650 down to 2325. So 3 point target would have been hit on this. We didn't take this level. Um, we're in teaching mode right now. I didn't put the trade on. But this was a level that we'd identified as a potential short, and T1 had already been hit. If you had taken this at 2650, some of our members may be taking this or have taken this, and so that was the short for now. The long opportunities don't really have any unless we get back down to the lows. Maybe a situation where this was the low, this 2800 quarter was the low from yesterday. If we can stay above that, I think the market's going to trend a little bit higher and just drift higher. But if we can get below this 2800, we're going to definitely retest the lows. It's just a matter of can we get through that. I have some chop in here with a nice strong move away at the market open. So we may get down here and get a little bounce out of this zone before testing the lows. Let's see. Yeah, the market opened up here at 2305, and that's where we're kind of fighting it right now. If we can get below that, I think we have some room to the downside. Questions, concerns, comments, markets you want to look at, trades? I know I just talked a lot. Oh, your mic's not on. Yeah, it's not on the audio feed. Yeah. Now look into this .D chart on TradeStation. So the .D is the regular trading hours only. It removes the overnight and Globex session, so you only see 6:30 to 1 o'clock trading. And as we can see here, the market opened up right here today. Boom. And held these lows here on these wicks, and then proceeded to move up to this 27 quarter right here where the market had pulled back yesterday, tried to rally up, couldn't, and then pulled back further. Same area, if you look at the Globex, kind of the same area where the prices fell off overnight. And so not surprising to see the market come up to this area and then pull back slightly. But now, we're battling this open area, 2803, and the market's trying to stay above that as we speak. Mm-hmm. Got a mixed bag today. S&P's flat, Nasdaq's up slightly, Russell's down, dollar's down, VIX is up slightly. Gold's actually up today, about 6 points. Gold's been getting hammered lately because of the dollar. Yeah, this is just Chop City today. I thought Friday we were going to get a little bit more movement, but I have not. Okay. Mm. It's a little slow today. Is there anything that you guys want to look at? We kind of wait and see. And still just stuck. Could be happening right now as we're speaking is since this wick cleared up to the upside a little bit, now we're right back at the 2805 quarter. We kind of have this base that we've put in. We could potentially just be basing out right here and then make a further move up. So getting long right in here, right around the previous close at 2805 quarter with a stop below. Really, these wicks down here, the opening wick on this candle, on this 15-minute candle was at 2802. So we could be basing right here and then potentially, setting up for a move higher. If you can imagine that this candle forms maybe a little wick down here and then it starts to shoot up because we opened right here at this 2650, 2806.50. If we can get above that and close above that, then you probably will see the market come back and retest these highs. And that's kind of what it looks like it wants to do. Yeah. Mm-hmm. So there it is. It came in, it hit the 2805 quarter, stayed above this candle open, which is right here at 2804.75, holding onto this base above these old highs now, and now it's going to make its move up. You like that? Quick little trade on that. Hit 3 points. All we're doing, people. We're breeding pandas over here. We're just trying to get 3 to 5 points out of the S&P on a daily basis. There's just little things that we can do to find opportunities, noticing certain data points. That's why we pay attention to these things. This is why we track these things. This is why every morning we have our pre-market prep where we come in, we look at the previous high, we look at the previous low, we look at the Globex high, we look at the Globex low, we look at the previous close, we look at the open of today's day session. Excuse me, all of this information gives us insight as to what potentially could happen with the markets and can tell us, real time what the market may do, and gives us a higher probability of being right on our trades because we can use that information and help us formulate the decision of whether to buy or sell or whatnot. We are right up into the zone. If all this junk behind this level wasn't here, I would like this a lot better. So there's a couple different things in terms of thought process that you'd want to go through right now. We're in this nice level, big strong move away. Market's been weak. We've been trending down the past day and a half, but we did hit this bigger time frame demand area where prices literally broke out of new highs, recent highs, and went to new highs. But we hit that bigger time frame supply and now have come back down. But we have all this trading behind here. And so what is that doing? That's just taking up all the orders. Too much trading, too much trading, too much trading. We have these two wicks pointing up, which tells me, which is the market telling us, that there is some supply, there is some selling pressure, but it may be a little bit higher. So this may not be the opportunity. Why we like this zone, though, is because the market has been weak. Nice strong move away. relatively low risk, a couple points worth of risk, and it's the overnight high. So there's a few factors that are in favor of the trade, and there's a few factors that are not in favor of the trade. And so, um, as a trader, you need to have your rules in place to determine what you do in this type of scenario. Is it a no trade? Is it a half your risk type of trade? Instead of doing, 10 lots, you do a 5 lot, or instead of doing 2 lots, you do a 1 lot. Is that type of situation or rule applicable for this? Definitely. Um, so there's no trade, half your trade, or if you're really aggressive, you can just take your normal trades, size and profit targets right here. But just from experience, I wouldn't technically do that. You want the market to show you it's going to be weak and has some weakness before you just go in there and sell it. And that's been learned over too many times, just blindly shorting the market. uh, Markets are inherently made to go up, and so if there's no catalyst for selling, most of the time the market's just going to sit sideways and somewhat drift up, and we have to understand that and pick our spots wisely if we're going to come in from the short side. Another way to do it is just use options, which we do. We have some bearish positions on, so if the market does move without us getting short, we're not going to miss the move because we are, participating in the downside with other derivatives, with other instruments. So that's the nice thing about trading both types of vehicles. You can put on some positions using options to tackle the bigger time frame levels, and then use your futures trading to get down to a 15-minute, an hour chart, a 5-minute chart, whatever it is, to get in there and find some smaller opportunities to take some money out of the markets on a daily basis, kind of thing. If that's your style, you don't have to do that. This type of trading, especially on the bigger time frames, like an hour chart like this, you really don't have to be in front of the computer to let it work. Technically, let's say that this market, this level came in. I guess the time frame doesn't matter. It really doesn't. If you saw the opportunity and you had your order in, you technically don't even you don't have to be in front of the computer to make money. You put in your entry, you put a stop below, and then you have a couple targets, and you kind of just let it go. And that's how we, show people who want to trade part-time or have a job or what, where you can set this up and still trade and do other things as well. Options work great for that. So do futures. Futures, you just, you have to find your levels and put them in there and kind of let it do it. Otherwise, the options they give you a little more wiggle room. You don't have to be as precise. You can be early. You can also be late with options, and you technically don't have to really, pick a direction with options. You can almost come in from a neutral standpoint. You can skew it, to the call side. You can skew it to the put side. Just depends on the level. So options traders would be looking at this type of level and would be getting ready to either sell some calls, buy some puts, do a combination of the two. And then you can get in there and directionally just trade options where you can, on expiration days, like today's Friday, we can look at SPX and SPYs. They expire today. You can go in and just like in the futures market, pick some levels and then directionally bet using options. Kind of the same thing, We come down to a level. You look to buy some calls on SPX or SPYs. Have a nice profit target. Use a stop loss on your premium. 50%, 60%, 70%, depending on your rules and your account size. And then you can go in and buy either calls or puts and trade it directionally. Why I say expiration days? Just because if you're looking for a day trade, you're not really needing more time than a day. And specifically with SPX, it's pricey, or it can be pricey. And so one way to help deal with that, besides doing spreads, is to trade on expiration days because the premiums are less because there's less time value. And so if you have less time value, then the contracts can be less expensive. But that's more of an advanced strategy for us. You got to time that. You got to the market has to be setting up for that. Not every expiration day and not every opportunity is going to be great with that. It kind of has to line up. Everything has to line up. The markets, the levels, the day, the time of day. You're not going to do this at 12:50 on a Friday. You know what I mean? Um, so there's some things that go into it as well, but it is a possibility for our options traders out there to take advantage of small moves like this. Anything you want to trade, you can chart. And if you can chart it, you can trade it, is what our belief is. If you can chart it, you can trade it, right? So, yeah. Are we, in terms of the market, are we just putting in a rally, putting in a pause, and then going to break up to the upside again? Or is this the start of the down move? Because you can clearly see when we're in an uptrend what the market does and how it reacts. Little demand levels, little areas of consolidation. When the market pulls back, they get held and it moves up. It gets held, it moves up. It gets held, it moves up. Now we're getting to the point where we've cleared recent highs, come into daily areas where we can see some selling pressure, and you can see that the market has started to have more pauses in between the rallies instead of just straight up like this and getting bought on each little dip or pullback. Now we're having protracted pullbacks, days, couple days, which can signal, which can tell us that we are at a short-term top, kind of like this, as you can see in here. Here's our analog. Market had been running up, but then started to put in some bigger pullbacks, some bigger pullbacks, some bigger pullbacks. And then you start seeing the market put in a lower high and a lower low, lower high, lower low, lower high, lower low. And you can see that the market was started to turn weak, and this was the start of at least an intermediate downtrend. Yes, we came down into this level and made new highs, but we did have a nice little pullback out of that area. And you can see that this may be setting up like this, where we're having pullback, a little high, a little pullback, a little high. Not until we start getting lower lows is that going to start to come into play. And right now we're having higher highs, or higher lows, excuse me. Low, 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 pullback, low, new high. So a higher low. Are we going to put in a higher high? If we don't put in a higher high, or we stay lower than this, the potential for a lower low is there then. If we can't make a higher high after this pullback, then we may be switching directions, switching trends, and coming into a short-term downtrend. Does that make sense, guys? You got to know what market environment you're in. And the only way to do that is look at bigger picture charts and bigger picture time frames to see where we're at. If we're putting in, we put in a high, we took out this high, we put in a low. Put in a high, a higher high, and then we put in a low, which is a higher low. So 2 higher highs, 2 higher lows. That confirms the uptrend. Now we have another higher high with a higher low. So that's 3. 3 times we have a higher high and a higher low. Higher high, higher low, higher high, higher low. Are we going to hold here and make a new high? And then make a higher low? Or is this the start? Is this the top of at least a short-term downtrend? And I keep saying that because of how prices are reacting off of these levels. You can see when the market is in an uptrend what it looks like. Big strong moves, little pauses, big strong move, little pauses, big strong move, and then it gets to the point where we start putting in some bigger pullbacks, and that could be forming the top, at least again, short term. But yeah, this turned into a lesson day rather than a trading day, but you know what? Sometimes the market does that, so Down to the 15-minute. Let me show you guys again what we do in the mornings and what these lines represent. So the white lines are simply price points that we're looking at for opportunities. The light blue lines, if you can see that, previous day low, previous day high. Again, just important information that we use to make our trading decisions, help make our trading decisions. This yellow dotted line is going to be the previous close, 2805 quarter. This is where the market closed yesterday. This green line, solid green line, 2803.50 is the open of today's session. And then these two purple lines, this purple line up here and this purple line in here. In this shaded area, this is the Globex or overnight. And these purple lines denote the overnight high and the overnight low. Again, these price points are important, not because of what price it is. It doesn't matter what price it is. It's what it is and what it represents. The overnight high is an area where prices attempted to rally up, couldn't any longer, and then fell from. Same with the downside on the overnight low. Markets attempted to go down, could not, reversed higher, and put in that low overnight. And so having that information helps us decide, what to do intraday. There's multiple different strategies and ways to interact with the markets based on these levels and based on these other price points. Again, it's not the price point itself, but really what it means and what it's telling us or can tell us. Does that make sense? Okay, cool. Cool. Got about 13 minutes left on this stream. Just doing a quick stream today, guys. Wanted to just really go over some information, go through this process, and do all that. Let's take a look at some other markets real quick. Take a look at crude. Oh, did it move on to its next contract? I think it did. Yep. Crude little opportunity right there. Already hit 67.70. It bounced. You can see this trading overnight. Took out yesterday's high and then pulled back at the open, which is the dark area. The shaded area is overnight trading. It pulled back from this area overnight at the start of the market. Now it looks like we may be squeezing a little bit here on this short-term time frame, 15-minute chart. We definitely want to go to a bigger time frame to see where we're at. Yeah, prices came down into close to the 66 area. We had been waiting for it to come down to this 60, right below 60, 66, into this level right in here. Hope it didn't hit it already, but it basically bounced and has spent the past few days kind of possibly putting in a bottom right there. Again, are we put in a higher high? Is this going to be a higher low? And is oil going to continue, its uptrend? Its move up. Same thing here. This was a level we liked. It touched it after putting in a high, put in a low, and then put in a new high. And then is this putting in a new low or a higher low? And then it's going to move up again and put in a higher high. Obviously, only time will tell. And the only way to find out is either participate or watch it. And so, depending on if you trade crude or not, there's different ways to participate in it. You could look to the futures market itself, get long. You can do futures options. You can even do equity options with USO or XOP or XLE and do it that way and participate. But the futures market, it provides such great liquidity in 24-hour trading, basically. So the benefits to do it in the futures market are there. It's the moves can be a little bit bigger. So if you're just starting trading, I wouldn't recommend trading oil. Uh, it's $10 a tick, and this thing moves about $1 a day in the very least. So it's $1,000 move per contract per day type of instrument. And so if you don't know what you're doing, or if you don't have a big enough account size, or you don't know how to properly position size for trading this type of instrument, then just stay away. But it can be really good. Let's take a look at gold real quick. We got a few minutes here. Gold took out yesterday's high at 1229, 1230. Got up to 1232 and then has pulled back. Let's look bigger picture. Gold has just been getting slammed as of late. And now gold looks like it came into this area right here at the bottom of this range where we had a nice move up, strong move up. This was reacting off of this level though at right around 1205. But these bigger time frame levels, the dailies, the weeklies, they tend to hit multiple times and can hold. And so as you can see right here, we put in a nice reversal candle, this hammer candle in here. We still came down and tested it, but it's attempting to rally. If this thing closes above yesterday's open, which was 12.27.8, I think we may be heading up for another 10 points at least on gold. So if that's the overall thesis and that's the overall thought process, how do you take advantage of that? Well, number one, let's identify our area where we want it. And it's down in there, right in here. There's 1216 to 1203. It's a big zone. It's 13 points on gold. That's $1,300 a contract. So you're obviously, most people, most retail traders, even professional traders won't take that big of risk. And so what you can do, again, is you can go to options, or you can go to futures options, or the other way around it is you've identified the level on the bigger picture, right? Then you want to go down to a smaller time frame. Smaller time frame allows you to find the opportunity. So there's that hammer candle that put in the low and then moved up, and you see that strong rally yesterday. Well, price is reversed from there, and you want to hop on board, wait for the retest. So it breaks out to the upside after putting in that buy candle, gets people in. People start to buy up here, but there's still some selling pressure up in here. Why? Because prices were not able to go above that area, so there is some selling in here, at least temporarily. The strong move up was met with selling. Markets pulled back into an area where it broke out of, where we got the signal on the bigger picture, right? This bigger picture hammer candle within this bigger picture zone is the opportunity that we're looking for at 1216 in the very least. There's our opportunity at 1216. You have this hammer candle. You have a little consolidation and a strong move away. You put your order in right around 1216 with a profit target in the very least back at these highs for T1 and then T2, which would be the next area where prices fell from. You want to get out before selling pressure, and so your T2 could come in up here, somewhere up in 1240. This is where prices came down, held, and then finally broke down from. So this wouldn't be a bad target for a T2 kind of play if you had gotten long down here. T1 up here at these highs, and then T2 you can get up closer to this. So that's a nice little setup in gold, a little thought process in gold of how to trade that and this type of opportunity. Now, if this is going to continue to move up, gold has just gotten beat up. Is it to the point where everybody on the sell side has capitulated and now we're going to get a nice, strong, massive rally out of this? We potentially could. Now, if we can clear this area at this 1250, you see this is where prices came down, put in a low, tried to rally out of there, couldn't, reversed, and then kind of sat sideways and broke down before getting into this area of buying. So this, again, we have our target here as well. You can see that, and that's why, because we can expect, at least initially, some selling pressure to come in here. The reason why we wouldn't want to just go full bore short here, or buy puts or load up to take this down further, is because we've already had a nice big strong move down. We've come from 1370 all the way down to 1216. You know, that's a big move in gold. And you don't want to short after the move down. You want to short up here. We actually had a short right here at 1326. We had a couple opportunities right here. Um, you don't want to short after a big down move. That's the wrong way to look at the markets. You want to get long after a big down move, just like you don't want to get long after a huge up move. It's that whole Bitcoin problem that people have run into. You bought at 20,000. Why? Yeah, granted you had no supply, but you're buying at the highs. You don't know what's the high, but I mean that wasn't the greatest example, but looking at gold, you see gold rally up here, you see gold rally up here, you see gold rally up here. Why would you want to buy that? Why wouldn't you want to buy gold down here at 1216 and then watch it rally all the way up? This people that novice traders that hop on board after a big move up or after a big move down in the same direction, those are the people that pay us because they don't know what they're doing. When people are selling down here, we're buying. And that's the type of mindset you want to have. You want to buy low, sell high, buy low. It's another thing to do it when you're actually looking at a chart and you have real money on the line. People get this confused and they think it's different than any other thing that they do in their life, and it's not. You go to the store and you want to buy something for the lowest possible price, right? Or if you own a business, you buy stuff at inventory costs and you sell it at a retail cost. It's the same thing in the markets. People try and confuse it and say it's, something else, and it's not. You want to buy low and you want to sell high. It's as simple as that. Now, figuring out what is high, what is low on a price chart and given a particular product or whatever it is, that's where the challenges come in, but that's not something that should stop you from doing this. It's all stuff that you can learn. But anyways, I'm going into rant mode. Any other questions, guys? Concerns? Feel free to shoot us some opportunities you got, some stocks, futures you're looking at. We only have a few minutes left. Let's go back to the ES and see kind of what happened with this thing. 15 minutes. It didn't get up to our zone at 2808.75 and has pulled back a little bit, getting this almost tweezer top look right here at 2800. On the hourly, it's definitely in that level, and you could have taken it on the hourly. And for us, again, 3 points, 5 points, and then after that, between 8 to really a trailing stop, almost. Target wise, this type of opportunity. This is what we look for on an intraday basis every day. Is not looking for home runs, but consistent 3 to 5 points in the ES is a nice business to be in. 3 points, one contract, $150. If you can make $150 a day doing this, you're going to be successful. If you can consistently do that, then it's just about position sizing and moving up your contract size. Because if you want to make more money, you don't need to go for bigger moves. You don't need to capture the S&P going from 2810 down to 2790 every day. It's not going to happen. But if you can take 3 to 5 points out of this, and let's say you do it consistently with one contract for 90 days, if you're able to consistently do that, then there's no reason that you can't do that with a 10 lot, if your account size permits it, obviously, and you're emotionally and mentally ready for that. But trading with a 1 lot, 5 lot, 10 lot, 100 lot, it's all the same thing. The levels are the same. The process is the same. The only thing that changes is the dollar amount. And so building the base and building your consistency up is key to trading. And that all comes from having the right mindset. Finding the levels, that's something that everybody can learn, and it's not too difficult to do. You look for areas where the market moved away in a strong fashion. And a lot of the times, those are going to be your opportunities where you get long or you get short. Now we go into nuances and other types of little opportunities and how to read charts and what each candle means. Yeah, that's going to come with experience. But getting the hang of, finding an area and then placing a trade, that's all easily learned and can be studied. It's the mindset that comes into play that people have the biggest problems with. So, anyways, it is 8 o'clock, guys. We are done with today's stream. Hope you enjoyed. Hope it was helpful. If you have any questions or concerns, please send us an email, shoot me an email anytime. I'll get back to you guys. But yeah, this was our process. This is kind of what we do on a daily basis in our trade rooms with our members. We identify opportunities in the E-mini S&P 500 specifically. That's what we focus on. And we put on day trades, we put on swing trades, and then we trade options around that and other positions to manage our money. But wanted to give you guys a little insight into what we do and how we do it and why we do it. And that's kind of what you're seeing today. Didn't fire off any trades. This one may be hitting in a minute or two. We didn't fire off any trades, but you guys got some good lessons, some good information. And if you do have any other questions, feel free, like I said, to hit us up, shoot me an email, and we'll see you next time. Hope you guys have a good weekend. We'll probably do some live streams next week as well. We want to, show more people kind of what we're doing and how we do it. And if you guys want to join up, visit simplyderivative.com and check us out. And otherwise, subscribe to our YouTube channel, and we'll see you next week. All right, guys. Have a good one.